When I look at what's happening with silver right now in 2025, I'm reminded of those rare moments in markets when everything aligns in ways that nobody quite predicted. We're witnessing something extraordinary, and I want to take you through what I see happening, because this isn't just about a precious metal going up or down. This is about fundamental shifts in how our world works, and the consequences could be absolutely massive for anyone who understands what's really going on. Let me start with the most striking fact that everyone's talking about. Silver has surged over 80% in 2025. We're seeing prices hovering around $58 to $59 per ounce, smashing through the previous record high of $48 that stood since April 2011. Think about that for a moment. A metal that was trading near $28 just last year has essentially doubled. And here's what makes this fascinating. Unlike previous silver rallies that were driven purely by speculation or investment fever, this one is fundamentally different. This is being driven by something much more powerful and, frankly, much more concerning from a supply-demand perspective. What we're experiencing right now is what I call a perfect storm, but not in the way most people think. When you dig into the data, you realize we're facing the 5th consecutive year of a structural supply deficit in the silver market. Let me break down what that actually means, because it's critical to understanding whether prices will crash or skyrocket from here. According to the Silver Institute's projections, we're looking at a deficit of approximately 149 million ounces in 2025. Some analysts are putting that number even higher, around 200 million ounces or more. To put that in perspective, that's like trying to fill a bathtub while the drain is wide open. We're consuming far more silver than we're producing, and this has been happening year after year after year. Now, you might be thinking, okay, supply deficit sounds bad, but why can't we just mine more silver? And this is where it gets really interesting. Here's something most people don't understand about silver. Approximately 70% of all silver production comes as a byproduct of mining other metals, primarily copper, lead, and zinc. You're not just going out and mining pure silver most of the time. This means that even when silver prices go up dramatically, you can't simply turn on more silver mines like a faucet. The supply is inelastic. It doesn't respond quickly to price signals because the mining companies are primarily focused on those other base metals. They're not going to dramatically change their operations just because silver is having a moment. Let me give you some hard numbers on the supply side. Global silver mine production in 2024 reached around 820 million ounces, up less than 1% from the previous year. Meanwhile, total global demand is sitting at approximately 1.2 billion ounces. Do the math there. We're short by a staggering amount, and this gap has been widening. What's even more concerning is that over the past decade, total silver supply has actually declined. We went from 1.07 billion ounces in 2010 down to an estimated 1.03 billion ounces in 2024. So we're not just failing to keep up with demand, we're actually producing less than we used to while demand continues to climb. Now let's talk about where this demand is coming from, because this is the part that gets me genuinely excited and concerned at the same time. Industrial demand for silver hit a record high of 680.5 million ounces in 2024, and it's projected to surpass 700 million ounces for the first time in 2025. This is the 4th consecutive year of record-breaking industrial demand, and when you look at what's driving this, you see the future of our technological civilization staring back at you. The solar industry alone consumed around 230 million ounces in 2024, and that number is expected to exceed 300 million ounces annually by 2030. Here's why. Silver's role in photovoltaic cells is essentially irreplaceable with current technology. Each solar cell contains approximately 111 milligrams of silver, and it's that silver that makes the whole thing work efficiently. Metal's unmatched electrical conductivity means that when sunlight hits those cells, the electrons flow exactly where they need to go. Now, there's been a lot of talk about reducing silver content per panel through technological innovation, and that's happening to some degree. But here's the catch. Even as manufacturers reduce the amount of silver per cell, the sheer volume of solar installations globally is growing so fast that total silver consumption keeps climbing. And it's not just traditional solar panels. The newer technologies like TOPCon and heterojunction cells, which are becoming the industry standard because they're more efficient, actually require up to 50% more silver per panel than the older PERC technology. So we're in this situation where the world is racing to deploy solar energy to combat climate change, and silver is the bottleneck. Global photovoltaic installations are projected to hit record levels in 2025, despite any political headwinds, and every single one of those panels needs silver. Then there's the electric vehicle revolution, and this is where I get really fascinated by the compounding nature of these trends. A traditional internal combustion engine vehicle uses about 15 to 28 grams of silver. An electric vehicle uses 25 to 50 grams, roughly 2 to 3 times more. Some advanced EV battery technologies, like Samsung's solid-state batteries that incorporate a silver-carbon composite layer, could potentially use up to 1 kilogram of silver per battery pack. Now multiply that by the projected EV sales. We're looking at somewhere around 17 to 20 million EVs sold globally in 2025, and that number is expected to more than double by 2030. That's an enormous amount of additional silver demand that simply wasn't there a decade ago. But wait, there's more, and I say that not to sound like an infomercial. But because the list of industrial applications just keeps growing, silver is critical for 5G infrastructure, where its conductivity makes it ideal for the sophisticated electronics needed. It's used in semiconductors, and as someone deeply involved in AI, I can tell you that the explosion in data center construction to support artificial intelligence is creating massive new demand. Every server, every advanced chip, every high-performance computing system requires silver in various components. Medical applications are expanding too, with silver's antimicrobial properties making it valuable in everything from wound dressings to medical equipment. So we've established that demand is surging and supply can't keep up. That alone would be enough to drive prices higher. But there's another layer to this story that's equally important, the macroeconomic backdrop. Interest rates and the strength of the US dollar have an inverse relationship with silver prices, and right now, both of these factors are moving in silver's favor. The Federal Reserve has been in a very interesting position in 2025. They've already implemented rate cuts, and markets are pricing in more cuts to come, potentially bringing rates down from the 5% range to around 2.75% over time. Now, why does this matter for silver? Because silver is a non-yielding asset. It doesn't pay interest or dividends. When interest rates are high, investors can put their money in bonds or savings accounts and earn a solid return without taking on much risk. But when rates fall, the opportunity cost of holding silver decreases. Suddenly, that shiny metal sitting in a vault looks a lot more attractive compared to a bond yielding 2 or 3%. At the same time, lower interest rates typically lead to a weaker dollar, and since silver is priced in dollars globally, a weaker dollar means silver becomes cheaper for international buyers. This creates a natural boost in demand from countries using euros, yen, yuan, or any other currency. We've already seen this dynamic play out powerfully in 2025, with the dollar under pressure and precious metals rallying as a result. Then you layer on top of this the geopolitical uncertainty that's been defining our era. We have ongoing tensions in the Middle East, the Russia-Ukraine situation continues to simmer, and there are trade tensions between the United States and China that President Trump's tariff policies have only intensified. When investors get nervous about geopolitical risk, they historically turn to precious metals as safe haven assets. Gold gets most of the attention in this regard, but silver benefits too. And because silver is more volatile and has a smaller market, it tends to move more dramatically than gold in both directions. Speaking of Trump's policies, this is actually a fascinating wildcard in the whole situation. The tariffs and trade restrictions could go multiple ways for silver. On one hand, if silver is added to the list of critical minerals, which has been discussed, there could be export restrictions that would tighten supply even further in certain markets. On the other hand, an aggressive tariff regime could slow global economic growth, which might dampen industrial demand. This is the kind of policy uncertainty that keeps traders up at night, because it could swing the market either way. Meanwhile, the structural drivers of demand are only accelerating. The world isn't slowing down its energy transition. If anything, climate concerns are intensifying efforts to deploy renewable energy and electric vehicles. India alone has added 25 gigawatts of solar capacity just in the first quarter of 2025. China continues to dominate solar manufacturing and deployment. The European Union is doubling down on renewables. The United States, despite some political headwinds, still has massive solar projects in the pipeline. All of this translates to relentless silver demand. Some analysts are projecting that by 2030, we could need as much as 400 to 500 million ounces of silver annually just for solar, up from the 230 million we saw in 2024. If EV adoption follows the trajectory that most automakers and governments are targeting, that's another enormous demand stream. And we haven't even talked about the potential for AI and advanced computing to drive semiconductor demand through the roof. Then there's the physical supply situation in actual markets. And this is where things get really interesting. Exchange inventories have been dropping. The Shanghai Futures Exchange warehouses have seen their silver inventories fall to near-decade lows. At the same time, we've seen a record volume of silver moving into London, which suggests tightening supplies in other hubs. These physical market dynamics create very real supply crunches that can send prices spiking in ways that fundamentals alone might not predict. Here's another angle that's often overlooked: central bank behavior. While central banks don't hold silver reserves the way they hold gold, Russia announced plans in 2025 to acquire $535 million worth of silver over the next 3 years. This is the first time any central bank has explicitly included silver in its purchasing plans during the current precious metals bull market. If other central banks follow suit, even in small amounts, that's a whole new source of demand that wasn't in anyone's models. The gold to silver ratio is another compelling indicator. Historically, this ratio has averaged somewhere in the range of 50 to 60 to 1, meaning it takes 50 to 60 ounces of silver to equal the value of 1 ounce of gold. At various points in 2025, we've seen this ratio as high as 100 to 1. Even now, it's sitting around 73 to 75 to 1. If this ratio reverts to its historical average, and gold stays strong or continues climbing, silver would need to appreciate significantly just to catch up. Some traders view silver as gold on steroids because of its higher volatility and smaller market size, meaning it tends to amplify gold's moves in both directions. Let's talk about what happens if supply really gets squeezed. Some industry insiders are saying we could see what they call a supply-demand brick wall, where the market suddenly realizes there simply isn't enough silver available to meet immediate needs. When that happens in any commodity market, prices can go parabolic in a very short period of time. We saw glimpses of this in the nickel market, we've seen it in oil markets, and it could absolutely happen with silver. Keith Neumeyer has suggested that triple-digit silver prices, potentially $200 to $400 per ounce, might be necessary just to incentivize mining companies to invest in new projects given the risks involved. Now, I want to put some numbers on the various forecasts out there, because they range all over the place, and understanding the spectrum of possibilities is important. On the conservative end, HSBC is forecasting an average of $44.5 per ounce for 2026. That's bullish compared to where silver was a year ago, but relatively modest given current levels. Bank of America is more optimistic, projecting a high of $65 in 2026 with an average around $56. These major financial institutions are basing their forecasts on macroeconomic analysis, technical indicators, and supply-demand fundamentals. Then you have the commodity-focused forecasts that tend to be more aggressive. WisdomTree anticipates silver could deliver a 23% return in 2025, outpacing their gold forecast. CME futures pricing suggests silver could reach around $50 to $54 by late 2025, with some contracts pointing toward $56 by 2026. Goldman Sachs, UBS, and several other banks have recently upgraded their silver forecasts, with UBS moving from $47 to $55 for mid-2026. Now, let me address the elephant in the room. With silver having already doubled this year, is this a bubble? Are we looking at another 1980 or 2011 situation where silver spiked dramatically and then crashed just as fast? These are totally reasonable questions, and I want to walk you through both the bullish case and the bearish case, because unlike some people, I don't think markets move in only one direction, and understanding the risks is just as important as understanding the opportunities. Let's start with the bearish scenario, the case for prices plunging. First and foremost, we have to acknowledge that silver has already had an extraordinary run. From a technical analysis perspective, we're seeing some warning signs. There's been a double top pattern forming on the daily charts with peaks around the $54 to $55 region. The relative strength index has shown bearish divergence, which often signals that momentum is cooling even if prices haven't reversed yet. These technical indicators matter because they reflect actual buying and selling pressure in the market. If we get a strong rebound in the US dollar, perhaps driven by stronger than expected economic data or a more hawkish Fed, that would put immediate downward pressure on silver. Remember that inverse relationship I mentioned. Similarly, if interest rates don't come down as much as markets are currently expecting, or if they stay higher for longer, the opportunity cost of holding silver increases and investment demand could evaporate quickly. There's also the risk of a broader economic slowdown or recession. Yes, silver is a safe haven asset to some degree, but it's also an industrial metal, and about half of its demand comes from industrial applications. If we see a significant contraction in global manufacturing, particularly in China, which is both a major producer and consumer, industrial demand could fall faster than investment demand rises. The dual nature of silver, both precious metal and industrial commodity, means it faces risks from both sides. We could also see profit taking on a massive scale. When you have this kind of dramatic price appreciation, there are always traders and investors who decide to lock in their gains. If enough people start selling at the same time, you can get a cascading effect where the selling begets more selling, especially if key technical support levels are broken. We saw this pattern play out briefly with some corrections in late 2025, and it could happen again on a larger scale. There's another factor that doesn't get talked about enough: substitution and technological adaptation. While I said earlier that silver is largely irreplaceable in solar panels, that's with current technology. If silver prices stay extremely elevated, you can bet that every solar manufacturer in the world is pouring money into research and development to find alternatives. Copper metallization has been explored as a potential substitute. If someone cracks the code on a viable alternative that's significantly cheaper, industrial demand could drop off a cliff. It hasn't happened yet, but it's a real risk over the medium to long term. Similarly, manufacturers could simply use less. We've already seen silver loading per solar cell decrease through better manufacturing techniques. If prices stay high, that innovation accelerates. The same goes for automotive applications and electronics. High prices are the best cure for high prices, as the saying goes, because they incentivize conservation and substitution. Now, let's talk about the bullish case. Because despite all those risks, there are some seriously compelling reasons to think silver could go significantly higher from here, potentially reaching that mythical $100 per ounce that industry executives like Keith Neumeyer from First Majestic Silver have been predicting. The fundamental supply-demand imbalance is not going away anytime soon. In fact, it's likely to get worse before it gets better. Mining companies have been underinvesting in new silver projects for years because prices were relatively low and margins were tight. Even with today's higher prices, it takes 5 to 10 years to bring a new major mine online. We're talking about exploration, permitting, construction, and ramp-up. That means the supply response to today's high prices won't materialize until potentially 2030 or beyond. On the ultra-bullish end, you have analysts like Philippe Gijels at BNP Paribas predicting silver could reach $100 per ounce by the end of 2026. These forecasts remain outliers, but they're no longer being dismissed out of hand. At the beginning of 2025, the consensus forecast among analysts was around $33. We've already blown past that by 75%, which should make us humble about claiming to know exactly where prices are headed. Looking further out, most long-term forecasts show silver in the $50 to $100 range by 2030, depending on how quickly the industrial supercycle plays out and how severe the supply constraints become. Some of the more aggressive projections go as high as $200 to $300 by the mid-2030s, though I'd take those with a significant grain of salt. Markets rarely move in straight lines, and there will undoubtedly be volatility and corrections along the way. So where does all this leave us? What should someone watching this video actually think about the silver market? Let me give you my honest assessment, and I'm going to try to be as balanced as possible here because I genuinely believe both scenarios, the bullish and the bearish, have merit. The fundamental case for higher silver prices is extremely strong. We have a structural deficit that's been building for 5 years and shows no signs of resolving. The industrial demand drivers are massive, multi-decade trends. The energy transition, vehicle electrification, advanced electronics, and AI infrastructure. These aren't fads that will disappear next quarter. The macroeconomic backdrop, with lower interest rates and a weaker dollar, provides additional support. And the physical supply situation in terms of actual metal availability is tight. However, and this is important, we've already had such a dramatic move that some consolidation or even a significant correction wouldn't be surprising at all. Markets don't go straight up forever, and silver is notorious for its volatility. If you're thinking about this from an investment perspective, you have to be prepared for the possibility of the price dropping back to $40 or even $35 before it potentially makes another run higher. That kind of volatility would be completely normal for silver. The real question is whether this is a cyclical spike that will reverse or a secular shift that will persist for years. My read of the situation is that it's more secular than cyclical. The underlying fundamentals are too strong and the supply response is too slow. But that doesn't mean we won't see major short-term volatility overlaid on a longer-term upward trend. If I had to assign probabilities, which is always dangerous but useful for thinking clearly, I'd say there's maybe a 30% chance we see a significant correction back below $40 in the next 6 to 12 months, driven by some combination of dollar strength, disappointing economic data, or technical selling. There's probably a 50% chance we see consolidation in the $45 to $65 range with lots of volatility, but no clear direction for the next year or two. And there's maybe a 20% chance we see a genuine moonshot toward $100 or higher, driven by a real supply crisis or a major shift in central bank or institutional investor behavior. But here's what I think is most likely over a 5 to 10 year horizon. Silver probably trends significantly higher, potentially doubling or tripling from current levels, but it does so in a very choppy, volatile manner that shakes out anyone who's not prepared for the ride. The structural trends are just too powerful. Every year that goes by with a deficit, we're drawing down above-ground inventories. Every year, the demand from solar and EVs grows. Every year, mining companies struggle to bring new supply online fast enough. There's also a scenario that keeps me up at night, which is what happens if we really do hit that supply-demand brick wall that some industry experts are warning about. If we reach a point where manufacturers literally cannot get the physical silver they need for solar panels or electronics production, prices could spike in ways that would make the current move look modest. We're talking about potential disruptions to critical supply chains in the green energy and technology sectors. That would be a genuine crisis, not just for silver investors, but for the broader economy. On the flip side, I also worry about policy responses. If silver prices get high enough to threaten critical industries, governments might step in with export restrictions, strategic reserve releases, or other interventions. We've seen this playbook before with other commodities. It's not a free market purist's ideal outcome, but it's a real possibility that could cap prices or create extreme volatility. Anyone considering how to position themselves around this situation, I think diversification is key. Physical silver, whether in coins or bars, gives you direct exposure and serves as a real hedge against currency debasement and economic uncertainty. Silver ETFs like SLV provide liquidity and convenience for trading. Mining stocks offer leverage exposure if you can stomach the volatility and company-specific risks. And for most people, silver should probably be part of a broader precious metals allocation that includes gold, not the entire portfolio. The other thing I'd emphasize is that silver requires a different mindset than most investments. It's not a stock where you're betting on a company's execution. It's not a bond where you know your coupon payment. It's a commodity and a monetary metal with thousands of years of history, and its price is driven by this fascinating interplay of industrial demand, investment psychology, monetary policy, and geopolitical uncertainty. You need to be comfortable with volatility and think in terms of long-term trends rather than short-term price movements. I also think it's worth considering silver in the context of the broader energy and technology transition we're going through. This isn't just about making money on a price move. We're witnessing a fundamental reshaping of how civilization generates and uses energy. Solar power, electric vehicles, smart grids, advanced computing, all of this requires massive amounts of raw materials, and silver is one of the critical bottlenecks. Understanding this market is understanding a key constraint on the green energy transition that everyone talks about, but few people have really quantified. In conclusion, the silver crisis of 2025 is real, it's complex, and it's far from over. Prices could absolutely plunge if we get the wrong combination of dollar strength, rising interest rates, economic weakness, and technical selling. But prices could also skyrocket if the supply deficit persists, industrial demand continues growing, and investors wake up to the magnitude of the imbalance. My best guess is we see continued volatility with an upward bias over the next several years, but I'm humble enough to admit that markets have a way of surprising everyone. What I do know is this: silver has gone from being a somewhat sleepy precious metal that lived in gold shadow to being a critical strategic resource for the 21st century economy. Whether you're an investor, an industrialist, a policymaker, or just someone trying to understand the world, the silver story is one worth paying close attention to. The decisions being made right now about energy, technology, and monetary policy will shape silver's trajectory for years to come, and the consequences will ripple through the entire global economy. This is one of those rare moments where a single commodity sits at the intersection of so many massive trends, and I think we're only beginning to understand how the story plays out.